The market's in turmoil right now. Panic selling is everywhere, even in the big tech stocks. So-called safe havens are struggling, and it feels like no one is immune to this downward spiral. But here's the good news. While many investors are watching their portfolios bleed red, our stock picks have been quietly delivering huge gains. Not just the stocks we've covered here on the channel, but also the exclusive picks shared with our Discord community, where the numbers speak for themselves. If you're ready to turn your portfolio around, stick around. In today's video, we'll cover 3 stocks that are defying the odds and could still have massive upside potential even in this volatile market. Don't forget to subscribe and hit the bell so you don't miss any updates on stocks that can change your financial future. Stock number 1, Hims & Hers Health Inc., HS. Let's start with a standout, Hims & Hers Health Inc., HS. This is a stock we first flagged back in mid-2024 when it was trading between $10 and $12. Fast forward to this month and it's skyrocketed to $72, a 6 times return in just 7 months. Now, here's the exciting part. Due to the recent market-wide sell-off, Hims has pulled back to around $40, bringing it right back into our buy zone. This isn't just a random dip. It's a second chance to get in on a stock that has already proven it can deliver massive returns. So, why is this stock such a powerhouse? Hims & Hers isn't just a trendy health stock. It's a high-growth, cash-generating machine in the booming telehealth industry. They've built a dominant online health platform that spans areas like weight loss, dermatology, mental health, and men's health. And the best part? They're targeting a market of over 80 million potential customers. Despite all the hype around GLP-1 drugs, Hims is thriving without them. In fact, the company just reported record-breaking Q4 revenue of $481 million, a 95% year-over-year increase. Even more bullish, they raised their 2025 revenue guidance to $2.3 billion, showing that their business model is much bigger than any short-term headlines. The stock is currently trading at just 3.5 times forward sales, which is dirt cheap for a company that's growing at 50% annually. Right now, this isn't just a dip, it's a huge buying opportunity. If you miss that 6x return, don't let this second chance slip by. Stock number 2, Celestica Inc., CLS. Next, let's talk about Celestica Inc., CLS. This stock has been on fire lately. When we first covered it, it was trading around $40, and since then, it surged past $100, giving early investors a massive win. But thanks to the recent market pullback, Celestica is now giving us a great opportunity to buy the dip. And honestly, the setup looks even stronger than before. So, what's driving this momentum? The answer is AI and data centers. Celestica is perfectly positioned at the center of the AI-driven data center boom. The demand for cloud services and AI infrastructure is exploding, with companies like Amazon, Google, Microsoft, and Meta ramping up their investments in data centers. Celestica's cloud and communications segment saw 30% revenue growth year over year in Q4, and the company is now one of the main players supporting the $300 billion AI infrastructure market. This is not just a short-term trend. Industry forecasts predict the data center market will grow at a 10% plus compound annual growth rate CAGR for years to come, creating a long-term tailwind for Celestica's business. On top of that, Celestica is absolutely crushing it financially. They just delivered another blowout quarter, raised their 2025 revenue guidance to $10.7 billion, and have $400 million in cash with minimal debt. Even after a 220% surge over the last year, the stock is still undervalued, with analysts estimating a 38% plus upside from current levels. This pullback is a rare second chance to jump in on a stock that has massive growth potential. If you missed the first $100 breakout, now could be the time to catch the next wave higher. Stock number 3, Allot Ltd, ALLT. Finally, let's talk about Allot Ltd, ALLT. This cybersecurity stock has quietly been staging a major comeback and is now at a pivotal moment for explosive growth. Allot isn't just another cybersecurity company. They're a leader in network intelligence and security as a service. What's so exciting about Allot right now? The company just reported a stunning Q4 with 56% year-over-year revenue growth and their first profitable year in a long time. One of the biggest catalysts for this turnaround? A major contract with Verizon, giving Allot access to over 30 million potential subscribers in the US. But it's not just Verizon. Vodafone, O2, and other top-tier telecom providers have also partnered with Allot, integrating their cybersecurity solutions into their networks. This shift towards security as a service is a major growth driver, and we're seeing it reflected in Allot's numbers. Allot's financials are strong. Annual recurring revenue is up 43%, and the company has turned cash flow positive, boosting its cash reserves to $59 million. Despite all these bullish developments, Wall Street hasn't fully recognized Allot's comeback, meaning the stock is still undervalued relative to its future growth potential. The recent market pullback is giving us a golden second chance to get in before everyone else catches on. If you're looking for a long-term growth play with explosive upside, Allot could be your next big winner. If you enjoyed this video and want to see more, smash that subscribe button and leave a comment below with your thoughts on these picks. Let me know if you're already in any of these stocks, or if there's another one on your radar.